Welcome everyone, and thank you for joining the channel. We have some significant and concrete updates on the Iraqi dinar and the country's financial system to discuss today. I'll be breaking down the latest official developments, separating confirmed facts from speculation, to give you a clear picture of what's happening on the ground. Major reform, the end of Iraq's dollar auction system. Let's start with a monumental change that is now official. Iraq's central bank has permanently shut down its long-standing US dollar auction system, known officially as the Foreign Currency Sale Window and Electronic Platform. The official decision: Deputy Governor Amar Khalaf has confirmed that the deadline for ending the auction was set for the end of 2024 and will not be extended. How the new system works: Iraq is transitioning to a modernized banking framework. Traders must now deposit Iraqi dinars in local banks. These banks, in turn, must work through foreign correspondent banks, often with top-tier or AAA ratings, to process international transactions. The Central Bank of Iraq's new role. Crucially, the Central Bank of Iraq, or CBI, is stepping back from daily retail-level management. Its primary role now is to bolster the dollar reserves of local banks that successfully navigate the new compliance procedures. Goal and impact. This is a strategic shift. By distancing itself from direct dollar sales, the CBI aims to shield Iraq's economy from potential international sanctions and reduce opportunities for financial fraud. The government states this reform is designed to protect the dinar's stability and that the vast majority of transactions have already moved to the new platform. Institutional progress, stock market opening, and fiscal policy. Beyond the forex market, there are notable developments in Iraq's capital markets and fiscal management. Stock market expansion. In a move that signals growing institutional maturity, the Iraq Securities Commission has approved the listing of a new bank. Economy Bank's shares are now trading on the Iraq Stock Exchange following its submission of audited financial statements for 2024. This is a tangible step toward a more inclusive and modern financial framework. Addressing budget pressures. On the fiscal front, the government is taking proactive measures. Due to fluctuating global oil prices and rising expenditures, Prime Minister Mohammed Shia al-Sudani has ordered cuts to non-priority government spending. Official reassurance. Mazhar Mohammed Saleh, the Prime Minister's financial advisor, has stated that Iraq is not facing a severe liquidity crisis in the short term. He emphasized that stability depends on continued oil revenue and coordination between fiscal and monetary policies. A recurring challenge. This situation highlights Iraq's persistent economic vulnerability. As analysts note, over 93% of government revenue comes from oil. When prices fall, the state has historically resorted to short-term fixes like cutting public investment, which is crucial for long-term growth, or drawing down foreign currency reserves. Current dinar valuation and the revaluation discussion. This brings us to the most discussed topic, the currency's value. The official exchange rate. It is essential to ground the discussion in the current official reality. As of now, there has been no official revaluation of the Iraqi dinar. The exchange rate remains at approximately 1,310 Iraqi dinars to $1 US. Any claims of a change to a rate like 1-to-1 or similar are not supported by official sources. Policy discussions are ongoing. The Central Bank of Iraq has engaged in discussions about potential monetary reforms. These have included exploring strategies to enhance the dinar's value and ongoing talks about removing zeros from the currency, a technical process known as redenomination, aimed at simplifying transactions, not an instant revaluation. A critical context: foreign reserves. The health of Iraq's foreign currency reserves is a primary factor in any monetary policy decision. These reserves, which provide a buffer for the economy, stood at an estimated $111 billion in 2023. However, reports indicate they have since declined to around $104 billion. Continued depletion of these reserves to cover budget shortfalls poses a long-term risk to the dinar's stability. Looking ahead, 2025 marks a pivotal moment. The United Nations Assistance Mandate for Iraq, UNAMI, is concluding its mandate, and the U.S. has withdrawn most of its remaining troops. This reduction in direct international oversight places the full onus of governance and economic management on Iraqi institutions, testing their resilience and independence. To help you visualize the interconnected challenges and reforms shaping the dinar's future, here is a summary. Key factors influencing the Iraqi dinar's trajectory. Banking system reform. Current action, ending dollar auctions, moving to correspondent banking. Goal, increase transparency, reduce fraud or sanctions risk. Primary challenge, ensuring new system stability and broad access. Government fiscal health. Current action, cutting non-priority spending due to oil price volatility. Goal, avoid liquidity crisis, protect reserves. Primary challenge, over 93% oil-reliant revenue, hard to fund long-term development. Foreign currency reserves. Current level, approximately $104 billion, down from $111 billion in 2023. Role, critical buffer for currency stability and import financing. Primary risk, depletion to cover budget deficits weakens dinar's foundation. Geopolitical landscape. Recent change, end of UNAMI mandate, U.S. troop withdrawal. Implication, Iraqi institutions assume full sovereign control. Primary test, ability to maintain stability and reform without international scaffolding. Navigating information, a realistic outlook. Given these complex factors, it is vital to approach news about the dinar with a critical mind. Beware of unverified claims. Be extremely cautious of sources that announce specific revaluation dates or rates without citing official statements from the Central Bank of Iraq, the IMF, or the World Bank. As of today, no such official confirmation exists. Focus on institutional milestones. Real, lasting change is measured by institutional progress. The closure of the dollar auction, the listing of new companies on the stock exchange, and the government's management of its budget are the actual indicators to watch. Understand the long game. Economic reform in a post-conflict oil-dependent state is a marathon. It involves navigating political pressures, global market shifts, and deep institutional restructuring. While the potential for a stronger, more stable Iraq is clear, expecting sudden, overnight changes in the currency's value is unrealistic. The journey of the Iraqi dinar is fundamentally the story of Iraq rebuilding its institutions from the ground up. The reforms we are seeing are significant pieces of that larger puzzle. I hope this breakdown of the latest official news and the underlying economic context has been helpful. I am committed to providing you with factual, sourced information to help you navigate this complex topic. What aspect of Iraq's economic reforms would you like a deeper analysis of next? Would you be interested in a closer look at the new correspondent banking system or an analysis of how global oil prices directly impact the budget and the dinar? Let me know in the comments below.
And that concludes our special financial update. We thank you for joining us for this breaking news report. We will continue to provide updates as new information becomes available.